Hello, welcome to the Bearish But Paid channel. Today, we're going to focus on closed-end funds of funds, FOF, YYY, and CEFS. First, our disclaimer. This video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing in this content should be construed as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions, including buying or selling any securities. First, we'll look at the macro regime of the major trends. In U.S. stock markets, we have the S&P here had a nice 5% correction, and it appears during the holiday week, investors bought the dip. You can see the buy and sell signal histogram has recovered from the downtrend and is now showing a few green candles. You can also see the global reflation regime tracker, which is at the bottom panel here. This is a blend of several equities globally that are sensitive to global economy, and this has also turned up with the stock markets in general. So this is a precursor for potentially the bullish global economy. There are a couple of other signs that I noticed on or saw on Twitter of things like breadth improving as well. So there's been some confirmation that maybe a new leg of stock market rallying is about to start here. I always like to look at my ratio of VIX to VIX 3-month. And again, this is the S&P in the top panel. The ratio of VIX to VIX 3-month has turned green as we've now flipped from backwardation to contango. And we have this smoothed out line here that is also about to cross over green. And my histogram is also crossing over towards green here. These are great signals or great timing signals to determine when the rally is about to reconfirm. Gold had a strong rally this year or last year, and in a consolidation, a triangle pattern, and it looks to be breaking out above the triangle. This morning, there seems to be a retest happening above the breakout zone. But I do also have the buying signals here in the histogram. They're not very strong yet, but this is promising that we may be about to see the next leg up. As I previously mentioned, we could also have a kind of a sideways pattern that could last for several months. Typically, gold will go sideways for several months after a long run up. Oil is, this is a condensed chart for multiple years showing the kind of range where oil will dip down and then come back up to the top. I expect this recent downtrend since May to continue coming back down, kind of in the $50 range. It's a buy with two hands. 50, I think we could easily see a 54, 55 range here before new buyers come in. In Bitcoin, Bitcoin has been crashing, as it's very well understood, well known by everyone. We did have a recent bounce with some buy signals. I'm long-term bullish for fundamental reasons, but I do believe we can kind of come back down into the 80 range at lower ends, retest that hammer candle low from about a week and a half ago. All right, let's talk about closed-end funds of funds. So the funds I'm going to discuss today are part of my strategy. They're kind of in the conservative or in the safer income funds. We have, by buying funds of funds, you're often buying when there's a discount to the NAV, and therefore the fund managers are finding us deals. and they provide diversified exposure. To compare them side by side, we will start with YYY, which is the Amplify High Income ETF. This is a passive rules-based approach, so it tracks an index of CEF High Income Index, and the index uses rule-based methodology to pick the top 60 CEFs that are based on three factors: the yield, the discount to NAV, and liquidity. High score on yield would be a high distribution rate. High discount to NAV would be a higher score as well. And that helps identify the top 60 CEFs that might be selling at a discount. Let's take a look at their web page here. Amplify. So there's potential appreciation, diversification built in, and then it's also high current income. The distribution rate as of the end of the month was 12.33% with monthly payout. Let's take a look at the fact sheet. In the fact sheet, what's nice to see here is the asset class exposure. So because this is looking at all sorts of CEFs, you can see here how it's diversified across different types of assets. So we have everything from bonds to equities, convertible bonds, covered call funds included. And this provides kind of asset class diversification. This also provides diversification against different strategies and types of managers. Let's see. FOF, Cohen & Stearns CEF Opportunities Fund. This is a CEF, a closed-end fund of closed-end funds. It's an active strategy. So the manager selects discounted CEFs across various asset classes with focus on high income and capital appreciation potential. So basically, he's looking for value that the manager believes they're trading at a discount due to market efficiency and not for fundamental reasons. So I do like this approach. One thing I wanted to check. Let's take a look at YYY before we move on to FOF. So YYY over a longer period, you can see there seems to be some erosion here of the net asset value, and because it's using an index, maybe it's not always buying at the right point. And you can see these CEFs have had some corrections that are pretty serious. So back in early 25 here during the market swoon, CEFs did very poorly, and they did recover, but since about July, they're flat. All right, let's get back to our FOF discussion. Let's take a look at the webpage for FOF. Let's see here. All right, closed-end opportunity fund. And this, again, the manager selects assets based on the discount, if they're at a discount with a high current income, and potential valuation opportunities due to market efficiencies. We hold 110 different holdings at this time, and you can see the distribution rates around 8%. Just scanning the top holdings here, you can see we have commodity funds, equity funds, fixed income. Again, these are selected based on the discount to NAV, where the manager thinks the NAV can come back. Looking at the fact sheet, you can see here how it's diversified across the different types of investments. All right. And the last fund I wanted to showcase is CEFS, the Saba Closed-End Funds ETF. This is an ETF of closed-end funds. with an activist bent. So in addition to doing what FOF is doing, this fund will, the manager will actually use activism, shareholder activist strategies like doing proxy fights in order to force the underlying CEFs to change their approach in order to close the discount. So things like tender offers and liquidations. And this fund manager also uses hedges for interest rate risks and for equity risks. So let's take a look at their fact sheet. Closed-end funds, CEFS. Let's see here. So you can see the yield is also around 7 or 8%. And you can see here some of the asset class exposure. Currently, this is the portfolio is at a discount of 8.2%, and there's 83 holdings in this fund. All right, let's go take a look at how FOF has done. You'll see a difference here between YYY and FOF. Let me close this to better highlight. So while this fund will have big corrections, the recoveries are strong, and it may do a little bit better from a NAV erosion because of the active management. And CEFS, again, similar approach with appears to be even better potential for appreciation. So I use these funds in my portfolio. Looking at my portfolio spreadsheet together here, these funds are in my first quadrant of credit-based income products, along with this senior loans and CLOs, which we covered in a previous episode. I have the fund of funds here, FOF, YYY, and CEFS. Currently under allocated. Our target allocation is 2%, but we're down in about 1.5% for these funds at the moment. And I'd like to buy some more, but right now this quadrant is at full allocation. So we're going to have to make some moves, maybe sell some of the winners in order to make room to purchase and size up these positions. Just as a comparison tool to see these three funds, yeah, we're at about 8% for FOF and CEFS. I'm going to continue with the portfolio review. And this includes month end of November. So we are at 133,000 total value. I'm using some margin of 21,000. I have additional cash of 17,000 yet to be applied, and based on a 25% margin target, I can use another 11,000 of margin. So I've got some more buying to do to kind of size to the level we want to be at. We have 49 different positions. Our target is 50 positions, and our current rate of income. Let me scroll over here. We are showing a monthly income of about $32.94, which would translate to an annual income of $39,000 or 29% total or average yield based on the current distributions. Just going through the various segments here. So we recently sized up our EIC, ECC, OXLC, and XFLT. We went up to 2% allocation. We've got a little bit of appreciation since then. You can see here the position sizing. and the cost basis from previous purchases. We're still in a drawdown on these funds as they are at a large discount. As previously mentioned, this is a huge opportunity that is very low risk to buy at the current rates, which provide a nice yield here of between 11 and 29% for a distribution yield and dividend received by the funds. Here, no other changes in emerging market debt or high yield bonds. In our funds of funds, again, I mentioned we'd like to size up these positions. And here you can see the Schwab calculated yield and the most recent dividend. In our equity tranche or equity quadrant, I've got some preferred stocks, an equity fund, real estate funds, real estate related funds, and infrastructure, utilities. All of these are currently at a lower allocation and could be sized up. USA is in a drawdown from where I purchased it. IGR is in a drawdown, but otherwise the funds are pretty close to where we bought in. There's no major discounts here to chase. And I do have MLPs and dividends related ETFs, which we'll talk about next week in our breakdown. In our high yield quadrant, currently undersized and would like to buy some more positions in this area. We have our BDCs, FSK, ARCC, and VPC. And you can see here, we're doing pretty well on the positions versus cost basis, and but we are a bit undersized on 2 positions. So might be buying a few more shares if I see an opportunity there with where the discount is offered. And then we have our covered call. Actually, it's a good time probably to buy a BLOX and a high. Let's take a look at how those are doing in the charts. Right, so BLOX, similar to Bitcoin, we had a nice bounce after a major crash, and yeah, this is probably showing our buy signal. Doesn't paint on the chart yet because I don't have enough history on this ETF, but with this bounce, we should be having our buy signal. So this would be a good one to get into. I'm gonna probably watch how Bitcoin behaves here in the next test before I buy back into BLOX. But it wouldn't be a mistake to get in and buy some now. It's currently at 19.21, and my average cost is 23.64. So I would be bringing my average cost down if I bought it today. Let's take a look at the high covered call ETF. Oops. All right, so this appears to be in a downtrend. Let me expand my signal here, my histogram. This appears to be in a pretty significant downtrend, and we're seeing some buy signals on the histogram here. So this would be a good opportunity to buy a few shares and size up the position. So I may do that this morning here. Again, this is trading at 22.67, which is about 5% below my cost basis of 23.94 per share. So I will be buying a few shares of high this morning. Taking a look at the high risk quadrant, the ultra high risk yield based on covered call ETFs. We are currently oversized at 27% over our target of 25% of the overall portfolio. Misty is still in a horrible downdraft. I'm way over allocated on this at 5.6%. This is an early part of the strategy where I was focusing solely on Misty for this whole group, and learned my lesson. I'd like to have more diversification going forward and not putting all my eggs in one basket. But this does calculate at the current share price. This does calculate as a high yield, and hopefully we can make back some of the loss on this one. We're down about $20,000 in the position, and so far I've made $3,700 on it. So over time, hopefully we can make back a good chunk of that loss. I may sell a few shares. I'm a little bit over allocated, obviously. I may sell a few shares to in order for capital loss tracking for our tax situation before the end of the year here. So probably we'll sell a few shares in order just to record that capital loss and to offset some other capital gains I have this year. Maxi follows Bitcoin, so similar to Misty. It's also in a drawdown, 45% from the cost, and this one is under allocated. So this would be a good opportunity to buy a few more shares and average down. But again, I'm kind of waiting to see what happens with Bitcoin. All right. Let's take a look at the bearish funds just to see how they're doing. Because this is the strategy of using the bearish funds is to kind of offset some of the high flying funds and create a little bit of some alpha by blending in these. So we bought into Winter in order to offset for Misty, and it looked like we were having a downtrend in Bitcoin. So let's take a look at Winter. All right, and Winter is our buy was over here somewhere, and we're currently up quite a bit from that buy point. The first buy signal, again, this is kind of a reverse of Mister. So the first sell signal on Mister was back here, October 9th or October 10th, and then we had a secondary sell signal on Mister on October 30th. I purchased around there, October 30th or the day after, and since then we've had a nice rally on Winter. The idea for these bearish funds is that we're going to, be tactical, and we'll buy and sell in order to kind of capture some of that appreciation on the short term. So just taking a look at this fund here. I made about 20% so far. Actually, based on the fact that Mister is in a buy signal now, following this rule, it's a good time to liquidate some of my Winter positions. So I might go ahead and do that this morning. Right. Let's take a look at more recent entrants. Salty. All right, Salty we bought over here as it was starting to show buy signals. This is a weekly payer, and you can see it's dropped. The capital has dropped down because the timing was where the stock market decided to rally, and all the high risk stocks started rallying back or recovering from their drawdown. So we're going to see here how this evolves. CRSH is another one we purchased. Oh, and this had a stock split. So you can see CRSH is in a buy signal or had a buy signal. I think we purchased around here somewhere, and we are in a downtrend since because Tesla has been recovering. So we will again keep an eye on this. May buy some more. if we get another group of green bars in order to average down. And the other one, oh, dips. Dips is also a recent purchase. Let's take a look at that. So dips is has had buy signals. We purchased about 3 or 4 days ago here, and we're right on the same level so far. And dips is again the NVIDIA bearish fund. Overall, I'm thinking NVIDIA is probably a good one to be bearish on, considering the recent news from Google that their Gemini has been was built on or is trained on uh, their own chips, and they did not have to use NVIDIA. So it shows there is a potential competition for NVIDIA's chips. All right, that's enough for the portfolio update. If you have questions about any of the funds on the chart, please feel free to ask questions. I'm happy to oblige and trying to improve engagement on this channel. So please feel free to ask any questions. All right, next up in our deeper dives is next week we're going to talk about the super dividend funds for high income, and that is SDIV and DVYE. If you're enjoying this content, please subscribe, please share, please give it a like, and leave a comment. It certainly helps a lot for YouTube to share this out for other people to see it. I appreciate the ones who have listened to this long. Please go ahead and hit subscribe at least so you can hear about the new videos when I come out. Usually I try to make a video every weekend or on a Monday. All right, thanks very much everyone, and see you next time.